5 dividend growth stocks that are offering a flash sale, even while the market is basically trading at all-time highs. All these different stocks are going to pay a substantial amount of cash flow to investors, but also have the potential to grow from here. So drop a like down below and let's get right into the first one. So the first dividend growth stock that's definitely still on sale and is sort of a controversial one, but a stock that I hold a ton of in my long-term portfolio is ticker symbol VZ or Verizon. Now Verizon is still trading sub $40 per share, which has actually made a decent recovery, and that's after Verizon stock was beat up substantially. Now with Verizon still trading where it is, it's offering a 6.74% forward dividend yield, which at least historically speaking is much higher than the average of 4.71%, which is what we've seen over the last 5 years. Now Verizon's sector PE ratio comparison. Verizon is at a 8.6% PE ratio, where the average communications is at 18.1%. Now even though, like we said, Verizon stock has recovered substantially, being more specific, the fact that Verizon's 52-week range low was $30.67 per share, Verizon is still offering a buy and hold opportunity for investors that are willing to risk the headwinds for the communication sector and want to lock in a relatively juicy starting yield. Now Verizon's dividend safety, according to Simply Safe Dividends, is a 70, which I would say in my opinion is pretty much on point. I think Verizon's dividend is safe unless there is some sort of black swan event or unless there's something crazy that happens within the company. And Verizon's beta being 0.42%, this stock isn't going to whipsaw the portfolio too much if that's what you're looking for. Now, as far as dividend growth goes, Verizon does have 17 years of consecutive dividend increases, but although they are very slow, we're talking like 2 or 3% over the last 20 years. And even though Verizon does have 40 years of consistent dividends being paid, you can see that right here, every year or so, Verizon only raises their dividend like a penny or so, which is very slow, but again, more conservative and probably part of the reason on why Verizon has been able to pay so many dividends for so long, which sort of makes sense. So like I said, if for whatever reason you want some exposure to communications or are willing to risk and almost lock in a 7% forward yield, Verizon stocks definitely one to look into. Another single stock, this one's a mortgage REIT that could be offering a buying opportunity right now, is a little bit risky, is Arbor Realty Trust or ABR. Now to be fully transparent, I own a few shares of this one in my long-term portfolio, and this is because I personally don't have the guts to load up big time, at least not as of yet. Now Arbor is basically trading at $13 per share more or less, which has recovered at least a little bit. But just as of recently has been selling off, offering a 13.27% forward yield for those dividend income focused investors. Now, how much growth in share price ABR has long term, it's really hard to say. I've held Arbor throughout different times in history where it has actually grown over a short time frame pretty big. Now, the elephant in the room, Arbor does have a 50 on the dividend safety score, and I think that's also on point. This dividend is definitely borderline safe at best. And although Arbor Realty did completely cancel their dividend back around 11 years ago, since then there has not been a single year where Arbor hasn't paid, and also there's been some pretty significant dividend growth throughout the last decade. We're talking a 10% dividend growth rate, and this is over the last 5 years, so especially for a stock in this sector, that's sort of unheard of. Now, as you can see right now, the 5-year average for Arbor's dividend is 9.57%. It's currently offering 13+%. Arbor has a 7.6 PE. The financial sector, all in all, has 11.8. The fact that Arbor within the last year was trading almost at $18 per share, this means this one could be offering a buying opportunity, at least for those willing to take the risk. Another stock that's offering a screaming buying opportunity for those that are willing to take the risk and take the plunge is Pfizer, which is currently trading at around $28 or so per share. Now, Pfizer is offering a 6.01% yield. The average is just around 4%. So this one is screaming buy and hold me for those dividend income focused investors that want to lock in a massive starting yield. Now, Pfizer's 52-week range is pretty crazy, considering not that long ago, Pfizer was trading at $42 per share, more or less, and now trading closer to the year low at $26 per share. As far as dividends go, there's 13 years of increases and 13 years of consecutive dividends. And although the dividend growth isn't the fastest, on the last 20 years, 5% per year average is not bad whatsoever. So for those investors that might want some exposure to pharmaceuticals, Pfizer is definitely on sale, at least relatively speaking. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. The next single stock that's on sale and has definitely been on my daily buy list for a while now is ticker symbol lower Realty Income. Now, Realty Income, where it's trading currently, is offering just shy of a 6% forward yield with an 80 on the safety score. That's about as good as it gets. Now, Realty Income currently trading at $52 per share is not trading at the lowest or the highest, sort of somewhere in the middle. Now, of course, when it comes to Realty Income, we know how many months in a row this monthly payer has been paying dividends for a very long time. 29 years of consecutive increases and 55 years without a reduction. Although Realty Income is known for paying dividends and has been for a very long time, the dividend growth has been sort of lackluster, only 3% per year, and this is the last 5 or so years. So we'll see if Realty Income can do a little bit faster dividend growth in the future, but at least until then, it's not all that bad. Now, for me personally, I'm a lifetime fan of Realty Income. I've been buying shares in the 70s, I've been buying shares in the 60s, I bought a ton of shares in the 40s. Realty Income makes up a large portion of my portfolio and will continue to do so, especially if it stays as cheap as it is currently. And with interest rate cuts being somewhere around the corner, I think Realty Income has the potential to not only trade up to $55 per share, but I think with that Realty Income, within the next, say, year or two, as long as there's not any sort of black swan event, I think Realty Income could be trading at $60 or $70 per share. But of course, let's wait and see. Now, the last dividend paying stock that could be offering a massive buying opportunity for those investors willing to take on some risk is BTI, or British American Tobacco. Now, I personally own a small position of BTI in my long-term portfolio, very small, maybe just like 20 or 40 shares, I think. But BTI as of recently is trading down again at $30 per share, so it is offering almost a 10% forward yield, which is massive. Now, some of the good about BTI, of course, is that it's super low beta. It's offering nearly a 10% yield, but some of the bad, the dividend is sort of questionable at a 45 dividend safety score. On top of that, the dividend growth is pretty slow. We're talking 3% over the last 5 years. The latest is only 2% over the last 20 years. It's grown their dividend a little bit faster, of course, but BTI has paid a dividend for several years, 24 years, and has grown their dividend for the same. So for those investors that want some exposure to the sin sector, tobacco, and want some exposure to BTI, at $30 per share more or less, we're pretty much touching or getting really close to that 52-week range low at $28.86. So could BTI be trading near $37 or even $40 per share within the next, say, year or so? I suppose it's possible, but within this sector, within this stock even, there's lots of headwinds, and again, it's more of a risky one. But for those that are willing to take upon that risk, you're going to get rewarded, or at least could potentially get rewarded handsomely. So there we have it. Those are 5 different undervalued dividend stocks that could definitely at least have the potential to make us rich this year. Now, I get it, it's harder and harder to find deals in this market where the market is basically trading in a lot of areas at all-time highs. But if you dig around deep enough, and if you're willing to take upon some risk at least, there's still some names out there that could be offering a buying opportunity. But now lastly, I want to hear from you guys down below. Out of all 5 of the stocks we went through in this video, I want to know if you could only buy and hold one of them, which one would it be and why? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.